Hi everyone, so pleasure to be here. So I'm the CEO of Colony. Basically, what we do at Colony is that we focus on fostering the growth of the Avalanche ecosystem in different ways. So we enable our community to invest alongside big boys VCs in seed private sales on the Avalanche ecosystem. Um, and 2 weeks ago, we also released CAI in partnership with Future Finance to track and enable easy exposure to the Avalanche ecosystem, amazing growth. So in a nutshell, we are an Avalanche ecosystem accelerator, and happy to be here today to discuss about passive investing and the new CAI index on Avalanche.
Awesome. Thanks for joining us. So why don't we kick it over to Oliver, to you from Phuture, if you want to introduce yourself to the listeners here.
Absolutely. Thank you for having me on. Really appreciate being here. My name's Oliver. I run head of product and I'm a co-founder at Phuture. Phuture is a decentralized crypto index platform. We focus on creating passive products, whether they be indexes or even vault type products that make investing into sectors of crypto or investing and managing a single asset in crypto much easier. That's been our mission since we started. And we are really proud to be partnering with Colony to create the leading benchmark index for Avalanche. It's been amazing to see the growth that the CAI index has had over the last sort of 14 days that it's been live, and we have lots of exciting news to kind of share as we continue to grow. But it's been a great 14-day launch so far.
Amazing. That's good to hear. And thank you for joining and excited to dive in. So why don't we go to Dylan from Yield Yak? You want to say hello?
Yeah, sure. Yeah. So I'm from the Yield Yak team, and we've been working with Colony and Phuture on some of the yield bearing elements of CAI. But for any that don't know Yield Yak, we're a yield optimizer native to Avalanche, and we have a bunch of kind of DeFi tools and products to help users navigate the Avalanche ecosystem.
Awesome. Yeah, exciting, and thanks for joining. And then we'll go to David from Traader Joe. I think you're joining us.
Yeah,
so
nice
you
to
want
meet
say
you
hello?
all.
Yeah.
Hello, everyone. I am the general manager of Traader Joe. Traader Joe is the lead index on Avalanche, and we are very happy to host the CAI token on our DEX and have supported it with a very nice farm in collaboration with the team. And I'm happy to be here among you all.
Awesome. Yeah, thanks for joining. And then JD, if you want to go ahead and say hello as well.
Yeah, thanks, brother. Great to be here, guys, especially with all these other amazing ecosystem projects. Super excited for CAI. Really excited to talk about this. I'm one of the founders of BENQI and Rome Blockchain Labs. If you're not familiar with us, we do lending. We were the first native lending protocol on Avalanche. We do liquid staking for SFX, and just today released BENQI, which is exciting. Won't bore everybody with that at this exact second, but super stoked to be talking about CAI and what it's going to do for the ecosystem.
Awesome. Yeah, thanks again for joining, JD. And then finally, Luigi, I'll let you jump in and say hello and kind of kick things off into our discussion today.
Sure. Thanks, Kyle. So I'm Luigi DiMeo. I am the head of DeFi here at Avalanche Labs, focused on building out the Avalanche ecosystem. I've been here for about 16 or 17 months, seen the roller coaster firsthand, and I've enjoyed it. Happy to discuss a lot of what's going on with the CAI index product today. And, I think we could just jump right into that. I'd love to just ask you, Elie in particular, start with you and kind of understand what was the vision behind this product? What was the mission? Kind of why did you set out, devote your resources, your precious resources on this particular product?
Yeah, thanks, Luigi. Thanks for the question. It's a great one. So, I think, CAI idea was always on Colony's roadmap. So we believe that it was very important to be able to follow and invest in the growth of the entire Avalanche ecosystem in a very easy way. So this is why we built CAI. So on Avalanche, there is already few indexes that were live, and but our ambition was to offer something a bit different. So we wanted to build the largest index on Avalanche with very high liquidity and a very rigorous methodology. And I think we already accomplished that ambitious, goal. So CAI is now the third largest on-chain index across the entire crypto space in terms of liquidity, and it's the largest in Avalanche in terms of market cap, volume, and liquidity. And despite tough market condition, I think now was the perfect time to release such a product, for the simple reason that in few years from now, I think the performance from inception will be significant and therefore will enable us to attract more capital. So yeah, that's basically it. And if you look, more broadly about this launch, so Avalanche has been live now for like 2 years. So releasing that now with already more than 700 projects launched, huge incentive reaching $500 million from the Avalanche ecosystem. I think it was great to start be able to properly track that growth and with a single product.
Great. No, I think that gives a nice little taste of kind of, what attracted you about the product. For those in the call who might not really understand, index products in particular, and specifically CAI, can you just explain exactly what, somebody who purchases CAI, FYI, this is not financial advice, anybody who purchases CAI, what they're receiving, kind of what's happening behind the scenes with the assets that make up the fund, etc.
Yeah, for sure. I'll start, and maybe Oliver can also answer some of it. So CAI basically aims to provide a simple exposure to the growth of the Avalanche ecosystem. So the value of CAI is backed by several assets. Like for now, it's AVAX, Joe, and Key, and there is more to come. So it's basically like the S&P 500, which is composed of many stocks. CAI is composed of several coins of projects building on Avalanche. And also, on top of that, CAI enables users to get the yield of each assets thanks to our partnership with YieldYak. So basically, right now, I think buying one CAI is like holding 2.5 AVAX, something like 170 Joe, and something like 1,500 Key also. And so you have a true underlying value for each CAI, which is redeemable on our platform. So yeah, and Oliver, if you want to touch base on that as well.
Yeah, absolutely. I think that was a great explanation. I'll just add on to that and just say that, CAI is about tracking a basket of assets over time. And that's really, maybe even touches into kind of what is an index. An index is a basket of assets that are put together based on a methodology. And so we've taken the time to really go through the methodology of, the project and token characteristics. What type of projects are going to get into CAI? They should have significant usage. They should have teams that are building towards them actively. And you can check out the doc section to kind of dig into the other key elements in that area. Then there's token supply characteristics. Should have at least 30% circulating supply. Should not disadvantage passive holders too badly or significantly. Liquidity is really important for us. We also go through sort of each asset must have a minimum of $2 million liquidity. So all of these kind of criteria, right, that goes into what assets should be in this basket. And those criteria, that criteria is run on a monthly basis, and we reassess which assets should be in the index. And so what an index allows you to do is answer a much simpler question than, which are the best tokens on Avalanche. Instead, you can just say, will Avalanche be a successful ecosystem in the years to come? And if you think, yes, it will be, and it will be like orders of magnitude higher than where it is today, then your next question is like, well, what is the best investment vehicle that I can get a hold of that will give you that exposure? And that's exactly what CAI is, and that's exactly what an index is. It will give you exposure to an industry or a sector over time. And so, as projects do well, as some do badly, they'll drop in or out of the index. And so we're dynamically buying the best projects and allocating capital to them as the Avalanche ecosystem grows. And I think that's the key benefit that CAI provides. And I think that's a benefit that is both good for people that have been in the ecosystem for a long time, and they just want to add to their sort of core portfolio something that will grow and will sort of evolve with the Avalanche ecosystem, as well as people who are brand new to Avalanche that kind of want to get their first exposure to the best tokens there.
It was very good description there, helping us out. That leads me to an important question, and one that I've sort of gotten questions on myself. But in terms of the initial index and the initial makeup of the index, can you shed some light into what the process was in terms of selecting the weights, the constituents of the index, which by that I mean the tokens that were included in the index, and kind of how that will change as you mentioned, the index will be dynamically managed going forward. Just shed a little bit of light into what that process looks like.
Yeah, for sure. So it's and I'll start. Oliver, you can complete if you like afterwards. So just simply put, it's market cap weighted. So an asset needs to have like a significant market cap to be added into the index within Avalanche. Then there is a longevity sort of criteria. So a project needs to be live for at least 6 months. And then probably one of the most important during this market time is the liquidity. So you need to have a specific asset needs to have at least $2 million in liquidity to be added inside the index. So when we initially designed CAI about like 6 months ago or so, we had like something like 5 tokens that were making it into the index, and back then our liquidity threshold was at 5 million. And when we launched CAI, we lowered that liquidity threshold to 2 million, and only three assets, which are Avalanche, Joe, and Key, were able to make it into the index. And what we believe is that as the markets recover, as the liquidity on Avalanche grows stronger, we'll be able to easily add more projects on the index. And we have this strong liquidity requirements just to make sure that through protocol integration of CAI, it's liquid enough for people to liquidate, for example, some position, and to make sure that CAI is able to build that very strong utility across the entire Avalanche DeFi space.
I would like to ask you one thing then. What is the principle that makes the CAI token to move on a DEX? So besides holding the value of the underlying assets, what is the factors that make the token keep the peg with the CAI index when you buy it on a DEX like Traader Joe? And what happens to the CAI index token when one on the underlying assets has a time of volatility?
Yeah, so very easily you have an arbitrage loop going on. So people can buy and sell on Traader Joe. So if there is too much buying pressure, the price of CAI will go up there. But people can arbitrage that by redeeming all of the asset constituents, the CAI constituents, directly on our platform. So people can mint CAI or redeem the constituents of CAI. So it creates this arbitrage loop. Then everyone can basically take advantage of. So if the price on Traader Joe go too high, you're basically able to mint on our platform. So you get CAI at fair value, and then you're able to sell it at a premium on Traader Joe, therefore creating this selling pressure that will bring the price of CAI back down to its true value. And the reverse is also true. So if there is a lot of selling pressure on Traader Joe, then the price of CAI will trade below its fair value. So then you can just be able to buy CAI on Traader Joe and then go on a platform and redeem CAI for all the constituents, therefore making a profit there just by arbitraging it.
Yeah, so similar to TradFi, there's there's market dynamics that effectively allow for the buying and selling of the constituents in order to arb out the price of the index. So that's good because it kind of keeps the pipes running throughout DeFi, which is good. Kind of keeps all the tokens in line. It's actually a very important tool in TradFi as well with ETFs and create redeem mechanisms. So I think it's great to see that. Now that we do have some great participants in the panel from the ecosystem, I'd love to kind of just specifically to you, Dylan, from YieldYak, I'd love to understand a little bit more about the yield bearing and yield optimization that's happening, and kind of how you guys are working with Colony on facilitating that a little bit.
Sure. Yeah. So I guess just to give a bit of context from a DeFi farmer's perspective. I think one of the reasons that indexes haven't really taken off yet is that if you're a discerning DeFi yield chaser, you're generally speaking not just owning a bucket of assets that are sitting in your wallet. You're usually putting those assets to work, whether that's staking the token or supplying it on a lending platform or depositing onto YieldYak or Vector or Echidna to have your yield kind of boosted. So the vision for the partnership and the reason that the YieldYak's been working with Colony and Phuture is that we have yield bearing tokens like receipt tokens that we can give to the index itself, so that those tokens which are deposited through YieldYak that will be part of the CAI index will be yield bearing. So instead of just owning AVAX, a portion of that AVAX in CAI will be yield-bearing AVAX deposited through Aave, for example, or let's take Chi, for example. A proportion of that will be in a Chi vault through YieldYak, which will just be compounding your Chi rather than it just be kind of sitting stagnant. So you don't lose out on the opportunity cost or the upside of being part of an index. You're able to kind of you get the upside as well, with all the other benefits that that Eli and the rest of the crew have been kind of highlighting. So that's the vision. There's still, Oliver can go into a bit more detail, but the plan right now is to target 20% of the liquidity of each token to be put into a yield bearing vault through YieldYak. There's some conditions there like deposit fee and exit fees we need to avoid. So SJO for now is off the table, but Chi and AVAX will be put in your yield bearing vaults for targeting 20%, and that'll be reviewed as CAI's kind of supply cap increases. Hopefully we can boost that up even higher as CAI grows. So yeah, that's kind of the perspective from YieldYak's point of view.
No, that's helpful, Dylan. So in essence, like you're kind of leveraging the composability of DeFi, and you're building on top of some of the existing vaults and strategies, and delivering that yield back to the index holder in aggregate. If I'm understanding correctly.
I mean, we all of it can't go, for liquidity reasons. 100% of it can't be yield bearing. But the idea is that to build it slowly, to maximize the yield bearing elements as much as possible, and be a bit nimble in terms of where that yield is coming from. So yeah, we've been working with Phuture on the Chi and AVAX elements, which I think are pretty much imminent, and that will go into action real soon. So yeah, it's exciting from our perspective, just in the sense that we view ourselves as a bit of like an interchangeable tool in the ecosystem that we would like other people to use. We'd like people to make use of our vaults, because we rely on we build on top of other protocols. So it's really exciting for us to see when Colony reached out, we were thrilled to be a part of it, and to see people kind of using our vaults to benefit Avalanche DeFi users.
Yeah, and when I look at YieldYak right now, I see there's a CAI Avalanche Traader Joe LP farm that you guys have up there.
Best farm in Avalanche right now.
That's, yeah, I see 144% APY, albeit 750K TVL, but it definitely is a substantial return considering that there shouldn't be too much impermanent loss. I mean, there could be, but I would imagine that it'd be significantly reduced.
It's like 78% AVAX. So yeah, it's really really strong.
Got it. All right. So that's cool. So I guess that brings me to an important question. Like if the CAI index gets quite prevalent in the ecosystem, some of the things that you might, just thinking off the cuff here, some of the things that, I myself would like to see, and kind of not sure, what the plans are for this or how close it is, but would love to use CAI as collateral in particular. So we have BENQI here. Would love to see that integrated there, and kind of Banker Joe and Aave and all those other money markets, and being able to borrow against the position. I think that could be unique. Are there any plans for that going forward? I know there's liquidity constraints and things like that, but just kind of curious on what you think there, Elie.
Yeah, definitely. That's definitely planned around that. So we already announced a partnership with Yeti Finance. So we cannot start that partnership now because the liquidity, they need to see more liquidity. But Colony is committed to commit up to $2 million in both TVL and liquidity. So that will bootstrap even further, CAI liquidity. So that's on one hand to enable on-chain leverage. Also, we have more money finance. So they were very quick, and we really appreciated that, to integrate the LP from Traader Joe, so CAI AVAX. So you can take your Joe LP and put that on more money, and you'll be able to leverage your position there. So there is already some leverage component, which is great. And then we have more and more protocol integration coming.
And Elie, sort of cut you up, but that CAI AVAX LP gets deposited into YieldYak's farm, so you get the auto compounding elements, and you can take out a money loan. So yeah, more money did a great job there.
Oh, nice. That's good. What about money markets?
Sorry, Luigi. I was just going to add one thing that we've worked on as well. A pricing contract for CAI, which is live already on Avalanche. And basically, the nice property of the way that it works is that we're pricing the index based on chainlink feeds. Every single asset at the moment has a chainlink feed, and so when you want to query the sort of the share price, the underlying fundamental value of CAI, all of those assets, all those prices are derived from chainlink price feeds. And so actually we already have a very manipulative resistant pricing contract that anyone can query at any moment. It will tell you both the market cap and the sort of net asset value per share of the index at any moment. And it is already manipulative resistant, not least because it's made up of three assets, but also because those three assets are also chainlink price feeds.
Very cool. So I would imagine then to get it added to the money market would be pretty straightforward if it uses Chainlink, except for liquidity constraints.
Yeah, I mean, and I think to add on to that, it's atomically convertible to AVAX, which is another nice property. So at any moment, if you hold CAI and you need to get access to AVAX, you're kind of accessing. You can redeem CAI for AVAX. You'd be interacting with pools at a minimum of $2 million on each of the tokens, and then can go straight to AVAX if you ever need to, get liquidate for whatever reason. So that's also a good property.
Got it. Okay.
Yeah, and on top of that, in terms of protocol integration, so we are exploring few other ways. So we announced a partnership also with the DGIS protocol.
DGIS, right? Yep.
DGIS, yeah, exactly. So we have also like a price protection mechanism there that will be enabled very, very shortly.
Oh, very cool. Yeah, I'd love to see it get added to some money markets. I think, holding a basket, let's call it like Avalanche's baby GLP in some way, and using that as collateral could be kind of cool. So yeah, I think that would be a next logical step. With JD and Davide, I think you guys both have tokens that are constituents in this index. Kind of why was that interesting for you? I'll start with you, JD. Why was that interesting for you, if at all? And kind of what do you think that how do you think that can help the BENQI project, flourish?
Yeah, good question. I think first and foremost, it was interesting to us to see Colony double down on their commitment to the ecosystem as a whole. I mean, obviously that's exciting. There's a deep commitment to strong Avalanche projects and, creating a bar that other projects can aspire towards, to get the minimum liquidity requirements and so on to be able to be listed on the index is also, I think, a really good motivating factor for a lot of projects in the ecosystem. I mean, if you look at traditional markets, ETFs have proliferated and index funds have proliferated because in many cases, and whether we like to admit it or not, the performance of index funds generally is better than most other non-passive strategies. So, I mean, for new entrants into the ecosystem, it's a good way to get exposure. It's a good way to not have to constantly be focused on rebalancing and proper diversification. Eventually, I mean, 3 assets isn't hugely diversified yet, but it'll get there, of course. And you can somewhat reduce a lot of the other risks of investing in an ecosystem with overexposure to any one particular project. Then, of course, you add on the yield yak structures and some of the other partnerships that are coming out, and it really just compounds the benefit for users. So for us, I think it's an incredible initiative. I think they have Colony has great goals here in terms of wanting to have 20% of supply in all these major protocols. I think that's great. I think it's great also because you'll have likely some sort of governance partner. Not something that I think has been explored too deeply, at least not with me. But I think that will be interesting as as governance. If Colony becomes a meaningful governance participant, that will also be very valuable for users and ecosystems, or I mean projects. I think also it just creates exposure to a lot of people that don't have to then understand all the intricacies of each individual platform. I think that's obviously a benefit for many people.
Very helpful. And Davide, same question posed to you. Kind of, why was this interesting for Traader Joe? Kind of, what do you think that it can help provide for the ecosystem and the project writ large?
Well, so what type of aspects are you interested to explore specifically, Luigi?
Yeah, so basically, why do you think it's good for Joe and Joe holders to be constituents of this index? Like, why is that interesting for you guys?
Oh, yeah, completely. So first of all, it's an honor to be included as part of it. And what this means for anyone that is a Joe holder is that, first of all, it is a potential mean of diversification in case they might want something less exotic than just complete exposure to Joe, but still want a big exposure to Joe, as the CAI index anyway has a big percentage of it to be included within the index. It represents also a statement that Traader Joe token is part of the ecosystem as a solid opportunity besides the necessary tech requirements and liquidity requirements. And on a certain side, there is also to have to consider that CAI is bringing new exposure of the Joe token, so technically creating prime pressure in order to have the index being fully backed. What you need is what the CAI index needs is to hold a big chunk of Joe based on the percentage of index minted. So every time index token is minted, that represents on the underlying asset one Joe put somewhere within the CAI safe in order and being part of this index. So many people prefer to leverage out volatility, and that's why the CAI index is a good alternative to just AVAX. Often ecosystem tokens are considered to be a leveraged play on the chain. So if someone is bullish on Avalanche and then all the ecosystem, therefore they can get exposure to these specific assets while anyway staying solidly a third pegged to the AVAX solidity, which is what most tokens on the Avalanche ecosystems on liquidity pools are paired against. So tokens tend to move together with the AVAX token, and that's why having a more interestingly exposed asset is a power play for many that do not want to try to time the market with Joe or with the Chi token or with the AVAX token, but want to have a full exposure to key players.
Got it. Thank you for that.
And Luigi, not to mention the volume that we've driven to date through Trader Joe, Pangolin. We're generating fees for the Joe token holders. I think we've done well over $1 million of volume, across the exchange. Because obviously, every time we're minting, we're sourcing liquidity from the top exchanges on Avalanche. People are obviously going directly to the swap as well. So between primary and secondary market volume, then well over $1 million dollars of volume, and I expect that to increase as well.
Yeah, no, understood. Sticking with you, Oliver, I think a lot of people who are familiar with TradFi could take for granted, something like an index product, but building something like this in DeFi, would love to get a sense of kind of what's some of the complexity behind building, what are some of the challenges, and sort of, give us a little bit of, inside baseball in terms of like how it was building this product and some of the hardships you had to go through.
Yeah, definitely. The first thing is really keeping your minting and redemption logic flash loan resistant, and just being able to resist any sort of manipulation or at those points of entry. And so you obviously have to use time weighted average prices. Everything has to be TWAPed when you're evaluating each token. You got to think that every time we're minting, we have to figure out what is the net asset value, what is our market cap based on all the assets that we hold. And so, the first challenge was obviously we wanted to be yield generating. So we wanted to be able to have assets on YieldYak, but know about them, have the system know about them, as well as having assets within our own reserves. And so that was the first challenge that we had to solve, was making sure that we had an accounting system that could, spread it, that would allow us to spread our assets, not just, and, we have plans to improve the vault controllers. That's what we call them, vault controllers, that deposit capital to, so at the moment, AVAX is deposited to the BENQI YieldYak vault, 20% of the reserves there, so around 56K, 60K is there. And we want to be able to diversify that amongst two vaults so that we can deposit to both the AV and BENQI AVAX strategy. So there is, work ongoing at the moment to do that. But that was the accounting system that was initially, the first complexity that we had to overcome. For example, when you redeem an index, you always have to be able to redeem. There can never be a situation where, it reverts and it doesn't let you to allow you to redeem. And so we have to build into the redemption logic the ability to pull all the funds from the vault controllers if we need to. So imagine we had a situation where we have like 80% of our assets on YieldYak, and then a large holder of CAI wants to redeem. We have to be able to have a system where, okay, we don't have enough reserves sitting on the future side, so we need to pull reserves from the YieldYak side to make sure that redemption can happen. And so we had to figure out those complexities as well. With the TWAP, it's an interesting one because you want to be resistant, but you also want to be fairly accurate with your pricing, because otherwise you can start quoting prices that are quite far away from what the real NAV is, and so that was a challenge. I think Chainlink make that very easy because of the tolerance that they allow. There's very tight tolerance when they update, and with TWAPs, we haven't so far had to integrate any TWAPs so far. On some of the products that we have on ETH, we're beginning to start to look at that. So we're looking at 1 hour TWAPs to make sure that everything's resistant there. But I would say that was like the kind of the main challenge. You can accept, like, if you're familiar with how sort of Traader Joe works, you can either accept an exact amount of input tokens or get an exact amount of output tokens, and that is really challenging because you have to deal with price impact. Every trade has price impact, but at the same time you have this percentage allocation that you're trying to adhere to. So you're trying to manage the price impact of each individual trade to make sure that you have ways of executing these trades to adhere to your percentages, but by not getting blown completely out in terms of price impact. That stuff on the user facing side, like, obviously there's more of a user facing decision. We give warnings and things like that, but if you want to rip a huge trade that has a lot of price impact, then so be it. You're absolutely allowed to do that. But one of the great things about our system is that we have this reweight function. So, right, it's time to rebalance. We're gone to a new month. We basically input the new assets and the new weights, and then our smart contract creates all these orders. And once we create all these orders programmatically, and what we're looking to do is hopefully have this whole system just managed by a keeper network on Avalanche. And essentially, once these rebalancing orders come in, you can execute the rebalancing orders. But one of the things that we've created is a system where these orders are like whole orders, and in cases you won't be able to execute the whole thing because price impact will exceed a certain amount, and we don't want to eradicate capital to price impact. So what we do is we start tranching these trades, and so we've created essentially an API that keepers can interact with, and these orders are signed by a private key on that API. And when the order comes through, our smart contracts will recognize that it has been signed by the appropriate source and will execute it. And this was a way that we got around essentially helping people to figure out, well, here's the whole order, but how much of that order should I actually execute in one go? And I think that would be really, at the moment, with this current size and the liquidity we have, we don't really have an issue with tranching. But as we get a lot larger, I think that will become a great feature that we've integrated.
Thank you for that very thorough answer. It's clearly not a very straightforward thing to build in DeFi, especially given today's infrastructure. So, kudos to you guys for getting that over the hump and delivering it to the Avalanche ecosystem. I have one more question for Elie, and then we'll probably dive into some questions with Kyle. So you can start requesting to speak now ahead of that. But Elie, last question for you is kind of just high level. Where would you like to see this product go over the next 3 to 6 months? What are some of the things that you guys are doing to kind of get it there? And what kind of call to actions would you have for the community and everybody who's listening today?
Yeah, thanks, Luigi. It's a good question. So, what's next for CAI? Basically, we'll have more protocol integration. And this kind of session with the community today is great because also protocols can learn more about CAI and then potentially plan on integrating it. So we have protocol integration that's on our roadmap for sure, and we would like to have as much as possible. And then after that, I think that as the liquidity grows on Avalanche, more projects will be added on the index, so fostering diversification, and so therefore for our users, lowering risk while maximizing our potential returns. And Colony is, as I mentioned earlier, is committed to deploy up to $2 million in both TVL and liquidity to bootstrap, what we have built in just like 2 weeks in terms of liquidity to the next level. And then I think we will have like a lot of education also for our community, for them to properly understand that CAI is different from the other token that you have on the Avalanche ecosystem, because it's actually backed by real assets. So yeah, I think there's a lot of education moving forward, a lot of protocol integration. For sure, you will see more TVL and liquidity on CAI, because Colony will be here to back it up. And yeah, after that, what we would like to see is also to get CAI outside the Avalanche ecosystem in a marketing way, just to make sure that people also from other ecosystem understand that this is a great instrument to follow the Avalanche growth if they don't want to spend time and to research the ecosystem and to chase yield inside of it. So yeah, that's what is ahead of us for the rest of this year and the next one.
Great, thanks, guys. I'm gonna pass it over to Kyle now. See if we have some questions from the audience. Appreciate you guys humoring my questions, and look forward to kind of hearing the rest of the dialogue.
Awesome, thanks, Luigi. Thanks for driving us through that conversation, and lots of really exciting information coming out. And I love how all these ecosystem partners are kind of weaving together to build out these innovative products. So yeah, if you would like to ask a question, for sure, we want to keep this specific to the index here and what we've been talking about with all of our panelists here. So request to be a speaker, and then just definitely let's keep it specific to this topic, and then we'll see if anybody has questions, and then we'll wrap things up. So here's the first one. Burning Stars, you're up first. Let's see if the audio connects, and then we can go ahead and ask our panelists a question. Go ahead. Oh, looks like you're on mute still. Go ahead and try it. All right. Burning Stars, you there?
Yes, I'm there.
There you go. All right. Go ahead.
I have for you some good stuff, because I'm looking for someone who contracted my team, if you are interested, because
okay, awesome.
All right, bear market. Let's move to the next.
Yeah. We'll hit you up for sure. Thanks so much for joining us. All right, Austin, go ahead.
Yeah, why does Avalanche fucking suck?
Great question, Austin. Thanks for joining us. I hope you learned a lot today from our amazing panelists and speakers. But if you haven't been listening, there's a lot of alpha been dropped. I hope everyone here is having learned a lot about what's going on here. Any other questions we have? All right. Oh, we got one more. Let's try this here.
Three's a charm.
We got this. All right, go ahead. It's still loading. All right. That one's not going to work. All right, here we go. Doji, you're up. I'm going to add you as a speaker. All right, after it connects, you are free to jump in.
Hey, could you hear me?
Yep. Go ahead. We can hear you now.
All right. Yeah, perfect. I was just wondering, if any, is there a, I guess, desired amount of constituents that you would like under CAI? Like, let's.
Looks like your
I think his audio is rugging, but I think I understood the question.
Yeah.
Is there like an optimal or desired number of constituents for the index? I think Ellie's probably, maybe Elie or Oliver are best to answer that.
Yeah, for sure. So as of now, as we mentioned earlier, we are mainly limited by the current liquidity on Avalanche, and I think we target something like 10 assets. Then we can argue about it, but if you look at portfolio diversification theory, when you have something like 10 assets, you're already on a very good spot. So yeah, 10 assets was the initial goal for us. But then I think it will also depends on how things go. But yeah, 10 assets is a great spot to have like a proper index offering strong portfolio diversification without diluting too much the potential returns on the underlying assets. Oliver, if you want to talk a bit about it, I don't know.
Yeah, I think it's this is one of the things that makes Avalanche really exciting is that the cost of minting an index is just very, very cheap especially when you're comparing to Ethereum. And like we're very much limited on that side as to how many assets that we can include because costs just go up and up and up. And you can all of a sudden it's like $1,000 to mint an index. So you don't have those issues on Avalanche, which is amazing. So I think that as Elie says, the initial target is to get to 10. And with regards to like cost, we really have like the ability to go higher than that. And I think that as again, definitely on Ethereum, we're kind of limited by block space, but I don't know, that's going to be an issue on Avalanche in terms of how large the transaction can get, how many swaps that we can do in one transaction, and effectively get that mined. But I think the upside is way higher. So yeah, 10 is the initial target, but we have the technological capacity to go higher than that. Yeah.
Awesome. Thanks for breaking that down. I know we're running up against time here for us and all of our speakers. So wanted to first thank you all for joining. I know it's a group effort here to really build out this first large index. And like I think one of you mentioned, trying to market this out even outside of the Avalanche ecosystem for people to know that this exists. So thank you all for joining here. We'll definitely be dropping a recording of the spaces on our YouTube channel in a couple of days, so make sure to look there. But I wanted to just give each of our speakers a quick opportunity for any final thoughts or where they could definitely learn more. Specifically for like Elie and Oliver, like where should people go, dive in, learn, and research on the index, and then we can close things out.
Yeah, for sure. So I think if you got interested by CAI Index, you can follow CAI on Twitter. So it's CAI_index. You'll find that on Twitter. Then you'll be able to find right after that the Medium, where we have all the partnership announcements. We'll soon have all the rebalancement rules and everything there. So people, if you look to have more information, go on Twitter. You have everything. And then Medium is the way to go. And overall, what I would like to say maybe to finish is we had a lot of questions from our community, and they were asking why are indices a good investment tool? And I just wanted to address that real quick. So I think, as we mentioned already, so indices are great because they allow passive, easy market exposure, enabling the users to capture different trends over time. And so if you take the S&P 500 as an example, so if you had the S&P 500 in the beginning of this century, you will have mostly financial companies exposure. You will have, ride that very nice trend for the first decade of this century. And then without doing a thing, without rebalancing stocks or anything, you'll have built a strong tech exposure on the second decade of that century. So just by holding the index, you're able to grow exposure to popular trends and to ride them efficiently without doing anything. And this is also why we built CAI, because it would be basically the same thing. So now there is a very few assets on CAI. But as the ecosystem grow, you'll have a diversified exposure to blue chips on the Avalanche ecosystem. So maybe in the first years will be DeFi, then GameFi, whatever the trend within the ecosystem, you'll be able to ride it without any management through CAI. And I think this is why index are great tools, because you get access to all these underlying assets and the trends that they represent, without any management, no hassle. So it's very simple, and it's it's a good product just for that.
Yeah, it's a very good and simple to understand product. What I will suggest to anyone that feels a bit shy or not ready to look into a DApp which allows you to mint it on your own, just wanted to remind that it is very easy to get exposure to CAI by just simply going on Traader Joe, and then you can start buying your CAI token there. And that's going to be the most simple and easy to use way for anyone that just want to get a little of exposure, but mostly want to get part of the CAI project to just get it on the DEX, get it on the market. And after you understand a bit more, you can also, of course, go to the CAI platform and start minting it by yourself. But there are multiple ways for any type of appetite to blockchain levels that allows you to be part of it.
Yeah, definitely. Thanks, Davide, for adding that. And also just to mention, so CAI, and I didn't mention that earlier, CAI is available on Traader Joe, so you can swap there. It's also available on Future Finance, and it's also available on Colony. So for example, you can go on colonylab.io, you can open the app, and then you will have the index section. So there you are able to mint directly CAI. And the cool thing that we do is, depending on the size that you want to put there, we choose the best way for you to proceed. So you don't have to do anything. You just have to click on that button, and it will either take you to it will either use Traader Joe underneath to have the less price impact. For example, if it's a small order, and if it's a big order, it will mint directly CAI on the underlying smart contracts. So it's very simple, and you get access to that on colonylab.io as well.
Awesome. Thanks for the breakdown there. There's a lot for everyone to go dive into and research, but like you said, I think there's a lot of simplicity and different elements to this. So any other closing thoughts from any of our guests before we wrap it up?
Just wanted to say thank you for having taken the time to let us go through CAI. I really appreciate it. I think Elie's done a great job of kind of giving out all the links and the various features that we have available to everyone who wants to get involved. I would say that we've got a lot of exciting announcements that we're working on that are going to be coming up, that just are going to be building an ecosystem around CAI to allow you to take different types of exposure. Whether you want to go leverage long, or whether you want to short, whichever direction, however you want to use CAI, we're building and working on integrations to make that happen. So there's a lot of exciting stuff in the pipeline. So definitely make sure to follow all the relevant channels to keep up to date with that.
Awesome. Thanks, Oliver. All right. So let's wrap things up here. Thank you everyone for joining. Especially thank you to our guests here. We had a great cross section of the Avalanche family here on our panelists. So thank you all for joining. Looking forward to the growth of CAI and seeing how the adoption continues to grow and innovation builds around it. So thanks to everyone for joining. Stay tuned. In a couple of days, we'll have this up on YouTube, and we got lots more spaces to come. So make sure to stay up to date on Twitter here. We'll be announcing them soon. All right. Thanks, everyone.